Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, one of my very good friends recently purchased a house and applied for a home loan. Now, my friend and his wife both work for an MNC, and hence getting a home loan wasn't that difficult for them. They were very pleased about it. Their newly acquired property, very proud of it. But when I asked them for details and the detailed questions about home financing, that's when I realized that they hadn't really explored the different options available that would have surely helped them get a lower interest rate with better financing options between the fixed loan or floating loan options. Now, just like my friends, most of us don't really read the fine print while applying for a loan. We don't inquire about how much money we would end up paying the bank over a period of time, and we don't compare it with the total valuation of the property. Now, this comparison is important if we consider our property as a long-term investment. Today, we'll be talking about home loans in detail and also find out about how we can reduce our home loan burden. Let's welcome our guest, Naveen Kukreja, Managing Director of PaisaBazaar.com. Welcome to the show, Naveen. Now, the ICRA basically has come up with a report saying that the home loan segment is growing at the rate of about 17%. That's 2014-15. But what we find is that a lot of people are not really aware about the fine print, the agreement. Enlighten us on that, and how can one go out there as a consumer and get a better deal?
Yeah, thanks, Arjun. Like you said, home is typically the biggest asset that we have as consumers and as salaried professionals during our lifetime. So people do pay a lot of attention on buying the home, selecting the home, and they have a lot of involvement. However, when it comes to home loan finance, they typically kind of do not pay as much attention as they should be. They don't do basic things like comparing different rates. They don't do basic things like what products are available. It also kind of is because of the fact that they are very much involved in the home decision, and they hence kind of pay less attention to home loans and home financing options. My suggestion, and we'll talk about that in the episode today, is that look at the right kind of products which are available, look at how your finances are, and choose the right product. Compare different options instead of going to the broker or the first bank that you bank with, and then choose the home loan wisely. It can save you a substantial sum over the lifetime of the loan.
Right. So, the entire focus seems to be on EMIs. How much EMI am I going to? But we don't pay attention to the other charges that there are, which are bundled in with the home loan. I mean, can you talk about these charges, and is there a way to minimize it, if not avoid them altogether?
Absolutely. Like you said, interest rate is the most important charge in the home loan in terms of what EMI and what interest rate is being charged. But there are other charges like application or processing fee. They're typically combined. Banks typically charge between 0.5% at around 0.5% of the home loan amount. They now tend to cap it at about 10,000 plus service tax. So if you have a home loan which is higher than 20 lakhs, banks should be capping it at about 10,000. If they're not, and if they're charging you 0.5, you can negotiate that. The other charges are like prepayment charges, which RBI has done a commendable job over the last few years to try and abolish the prepayment charges. So for all floating loans, there is no prepayment charge now. But if you're taking a fixed rate loan, which we will talk about later in the episode, there might be some prepayment charges which you should be careful about. There is also one more charge, which is the valuation charge, which is also usually combined with the processing charges. But if a bank is offering doing some offer on processing charges, then they typically can ask for valuation charges as separately. You should be aware of that while taking the home loan.
Right. So, we've got two different kinds of home loans broadly. One is, of course, the fixed. One is the floating. You talked about that very briefly. Can you go through the different kinds of, what's the basic difference? And especially now that, the EMIs, the interest rates are being dropped, but gradually by the RBI governor. How are they different? What are the pros and cons?
Yeah, like you said, as the name suggests, the fixed rates are fixed irrespective of the external economic environment, on what's happening to the growth, what's happening to lending rates, what's happening to inflation. These rates are typically fixed for a certain duration. The floating rates are floating, as the name suggests, so they will change as per the external economic environment. In today's environment, when the rates have been going down and they're expected to either stay at the same level or go down, floating rates work out as better option, because if the rates do drop in future, your home loan rates also will drop. So there is no point taking a fixed rate right now. Fixed rates typically, because they are fixed and the bank is taking an exposure of uncertainty, they are typically slightly higher, at a slightly higher interest rate than the floating rates. In so say an environment or time period about 4 or 5 years ago, when the rates, home loan rates were about 8.5%, that time was a very good time to take fixed interest rates. And people who've taken fixed interest rate loans at that point in time and kind of locked their interest rates at 8.5%, they're feeling pretty good about what's happened in the last 3 years when the interest rates have gone up. But given today's day and age or today's time, I would suggest that if you're going for a home loan right now, go for a floating interest rate loan.
What about the overdraft facility of home loans? I mean, we've heard that term a number of times. Are there any benefits of taking that?
It's a very interesting product. Good that you talked about this point, Arjun. So let's take a scenario where I have a home loan of 40 lakhs and I am paying 11% interest rate, let's say. And at the same time, I have about 3 lakhs of surplus which is lying in my fixed deposit, which earns me an interest rate, let's say, of 8.5%. But if I take post-tax income, that's about 6%. So I'm paying interest rate of 11% on my home loan, and I have surplus of 3 lakhs and I'm earning 6.5%. There's a huge gap in that. The overdraft facility or the overdraft loan concept essentially benefits for people who have surplus. If I were to have these 3 lakhs in my overdraft account, in the overdraft product, that will net off the interest rate at 11%. So that kind of works better for me as an individual. So people who have surplus funds or are likely to have surplus funds at different points in time, the overdraft product works really well. Overdraft, because it has flexibility and it offers flexibility to consumers, it again charges, there's a convenience charge of about 0.5%, 0.25 to 0.5% higher than the normal loan. But if you have surplus or are likely to have surplus at any points in time, that's a very good product. There are banks which offer it, like leading banks like SBI, Citibank, HSBC. They have different names for these products.
And it's easy to opt for that?
It's very easy to opt for that. You just need to know that that product exists and you need to ask the lender for that particular product. It is not offered by all the lenders, but it's offered by some of the leading lenders. So if you are interested in that product, look for the lenders which offer that and then ask them for that loan. It's as easy as the other loan.
So we've heard of another term, home loan balance transfer. Now what is that, and again, how does it benefit a consumer?
Home loan balance transfer works well in a decreasing interest rate environment like today. Let's say people who had taken home loan about 2-3 years ago, or let's say 1.5-2 years ago, and had taken it at 12%, 11.5%. Now the rates have come down to about 9.7% after the recent rate cut. So if your current rate, for example, home loan rate is running at about 11% and you have about 15 years of tenor left, if you go for a home loan balance transfer, over the life of the loan, you could save as much as 5 lakhs. There's a table that we can show you which kind of shows you the different saving options. I would suggest that if you have a home loan at rates anything higher than 10.25 today, and you have a tenor of more than 10 years left, you should consider this option seriously. Go to any site like ours, PolicyBazaar.com, look at the home loan balance transfer calculator, see how much you can save over a period or over the lifetime of the loan. The only thing to keep in mind is that when you apply for balance transfer, it's treated as a new application. So the bank will do the entire process afresh. They will kind of value the property. They will charge a processing fee of about 0.5% or 10,000, like I said. So reduce that from your total savings. And if there's still substantial amount left, which typically would be the case if your rates are higher than 10.25%, you can seriously consider and opt for that.
So any other considerations when you actually opt for something like that? Do you need to be aware of certain conditions or any other hidden fine print there?
So if you have a floating rate with your existing lender, then you do not have to pay any prepayment charges. So That's something. But if you have a fixed rate, then that comes into consideration. It may not be as easy for you to go for balance transfer. If you decide to go for balance transfer, the first conversation you should have is with your existing lender, that this is the current rate and my current rate is higher, and can you reduce the rate? And if the current bank decides to reduce the rate, which a lot of banks do, then the process is very simple. However, if the existing bank refuses to do that, then you approach another bank after seeing your savings. Keep in mind that the process will take a little bit of time, and your property will get valued again, and you will have to pay the processing charges. But other than that, not too many other conditions.
Right. So how do you look at joint home loans? I mean, would you say that that's a good way to go forward on buying a house through a joint home loan?
Joint home loan works very, very well for people who are double income, or when the co-applicants are both earning. It works better in two scenarios. One is that it increases the overall borrowing capacity. Let's say I am individually eligible for 40 lakhs of loan, but my wife works and she is individually eligible for another 30 lakhs of loan. So in a joint loan, we are eligible for 70 lakhs. That's the first advantage of a joint loan. The second advantage is that because both of us are earning, both of us get equal tax deduction under Section 80C and under Section 24 against payment of principal as well as interest. So the overall tax efficiency is much higher, where both applicants kind of benefit from the tax efficiency.
Right. Naveen, you talked about tax savings. Can you elaborate on that? What are the limits that we currently have?
So there are two tax saving options in the home loan.
One, and you can speak about both the joint home loan as well as the individual.
Sure. It works similarly for both individual and joint cases. There are two tax benefits that one gets by taking home loan. One is tax benefit against principal repayment, which gets covered under Section 80C. So up to all the principal repaid in a financial year up to 1.5 lakh gets tax exempted under Section 80C. Besides that, the interest repayment that you've done in the financial year gets tax exempted up to a certain amount. If it's a self-occupied property, that amount is capped at 2 lakh. So basically, if you are staying in the house that you have a loan on, if you've paid 2 lakh rupees of interest or more than 2 lakhs, up 2 lakh rupees will get tax exempted. So that straight away kind of saves you about 60,000 of tax if you're in the highest tax bracket. If the property is rented, then there is actually no upper cap. So you can save unlimited amount of as much interest rate that you've paid. So for example, if I have a loan of 1 crore and I have rented that property and I've paid in the year I've paid 5 lakh rupees of interest to the bank on that home loan, the entire 5 lakh can be exempt or would be exempted. So that will get removed from my income, and so I save 1.5 lakh on the tax outgo. It works similarly for individual as well as for joint, in the sense the amounts are similar. In joint, actually both people benefit to that extent that they have ownership in the property. So the overall savings is much higher.
Naveen, we've been talking about the home loan scenario. It seems that it's improving. People are buying, taking more home loans. What would your top tips be for new home loan, people who are searching for new home loans, as well as those who already have existing loans?
Arjun, like you said, if you're taking a new home loan, I would suggest you start with comparing. Comparing today is not very difficult. You can visit a portal like ours, paisabazaar.com, and compare different home loan options. Watch out for if your property is already pre-approved by any of the lenders. That saves time and effort on the lender's part and your part in terms of valuing the property. Once you've decided which lender to go for, look for the right product. So if you kind of in the current environment, go for a floating rate option, because the interest rates are likely to come down over the next few years instead of a fixed rate option. Secondly, if you have a person who you can take a joint home loan with, your spouse, your parents, and they're also earning, it increases your eligibility for home loan. It also gives benefit, overall higher benefits to both of you. Thirdly, I would say that look seriously at overdraft facility product, especially if you are salaried and you're likely to either prepay home loan earlier than the 20-year tenor, or likely to have surplus from time to time. The overdraft product works really well in reducing your overall interest outgo. For the existing home borrowers, I would say that look at your current interest rate, especially if you're on floating rate products. If your current interest rate is anything higher than 10.25, have a chat with your existing bank and request them to reduce your interest rate. If they are not willing to do so, seriously consider switching your home loan, transferring your home loan. Look at the calculator on how much can you save over the lifetime. If your home loan rate is higher than 10.25 and your outstanding is, let's say, anything higher than 30 lakhs, you're likely to save substantial amounts, so seriously consider that option.
Now, home loans means that you are taking a large amount of loan, right? Yeah. So does it make sense to insure your home loan by a term insurance or some other product that secures your entire family?
That's a very good question, Arjun. And that's very important that if you do not have term insurance which covers your family in an emergency, then it's a very good option to take a insurance product which covers to the extent of the home loan. In any kind of a situation where you're no longer there, it protects your family against the burden of paying off the home loan and it still keeps the home with them for them to use. So it's a good idea if you do not have adequate term cover for your family.
Right, now it's time for your questions. We've got Rajesh Bhatia from Delhi who wants to know if he can take a home loan for renovating his house.
Rajesh, you can go for home improvement loans. These are called home improvement loans and they are available. Almost all the banks do offer that. So you can kind of again compare, go to a site like ours and compare, or speak to your current bank and then evaluate the options and the interest rates.
And of course, we've got another question from Sangeeta and her husband who are planning to apply for a home loan, and they want to know what kind of security she can present as a guarantee for that home loan.
Sangeeta, if you're going for the home loan, then there is no other security needed. The home itself is the guarantee or the security or the collateral, as the banks call it. You apply for the home loan, the property is the guarantee. If you, however, are going for a loan against your existing property, then again your property is the guarantee. I hope that's the question you were looking for.
Right, we've got Sonal Jain, and Sonal asks us about what is the best strategy to follow to get the best interest rates as far as a loan. Of course, we've been talking about that, but can you expound on that, Naveen?
Like I said that compare before you kind of choose the product. Compare amongst 2-3 banks. It's easy to compare on a website like ours. You can also talk to 2-3 different banks and look at the interest rate differential. Also, more importantly, look at which kind of interest rate you're choosing for. In current scenario, floating rate is the one that you should go for. Look for overdraft facility if you are likely to have any surplus funds in your account. That works really well in reducing the overall interest outgo.
Right, we've got Rajat, who's 36 and who's asking us about the age and tenure, whether age and tenure plays an important role at the time of applying for a loan.
Rajat, yeah, it does, and the younger you are, the higher tenor you are likely to get. The tenor typically ranges from 15 to 30 years. So after a certain age, you won't get the maximum tenor. The longer the tenor, the lower your EMI, but also the interest component would be higher. So it really depends on what is your capability to pay in terms of the EMI, and that decides what tenor do you want.
Thanks, Naveen. And last week we asked you a question: which of the following is not a permanent life insurance? A, whole life insurance; B, term life insurance. The answer is B, term life insurance. And Anisha, you won a voucher of 1,000 rupees. And in this week's question, the question is, what does EMI stand for? It's a simple enough question. So what does EMI stand for? Send in your entries to queries@policybazaar.com. Thanks a lot, Naveen, for joining us and talking about home loans. That's all that we have for you on this episode. You can also tweet us at Twitter @PolicyBazaar_in. And we'll see you next time with another episode of Policy Bazaar.